Hey guys, everyone, can everyone hear me clearly? Hey Mark, hey Fabio, Chomotse. I got Fabio, Richmond, Imad, nice to see you, man. Bryce, Eric, Diana, Donald, right? Jamilu, nice to see you too. Francisco, Ellen, hey guys. Hey Bradley, hey John, nice to see a whole bunch of you guys. Bob, nice to see you too. Maps, Moses, Roger, Gustavo, right? Nice to see, nice to see so many of you guys here, right? Yeah, it has been a while, hasn't it been? It's been about 2 weeks, right? I'm not sure if you can see my eye bags, right? I have pretty bad eye bags, but yeah, it's nice to be back. Thank you, thank you for your congratulations. Yeah, um, I saw Mark saying baby Elliot. Nice. His name is Lucas, right? I couldn't name him Elliot. My wife wouldn't allow me to name him Elliot Wave or something. Thank you very much, guys. Yeah, it's the baby has arrived, but the baby is not here in the office with me today, right? So I'm back in the office, right? Baby's back at home. Baby's back at home with my wife, right? Yeah. Uh, Sleepless nights. I'm not sure if it's because I get to just let me silence my phone a bit, right? I think after a while I just get a little bit more, what's the word for it? I tend to maybe it's just because you're so tired, right? So tired until the cries, and you can't even hear the cries anymore because you're just so tired, right? But man, uh yeah, like I mentioned to a couple of you guys, I might just be trading the US market session with how often the baby keeps me up at night. All right, man. Oh, yeah, Lucas is better than stochastic, I guess. Good stuff, and thank you very much, guys. Thank you very much. Thank you, Bjorn. Thank you, Fabio, Joanna, Francois, right, Richmond, Moses. Okay, right. Yeah, it's fun. It's fun, right? It's fun being a father, I guess. Nothing ever they say nothing ever prepares you for it. I keep watching all those YouTube tutorials, but until today, yeah, nothing ever prepares you for it, right? Thank you very much, guys. Right. All right. Let me see. A whole bunch of us. Okay, nice. A bunch of you guys tuning in today, right? Another great session. This time, right? I see Desiree here. Okay. Good evening. Right. Good evening. Thank you, Oluwol, right? And Jamilu, right? Um, yeah, today's session, we're actually going to focus a bit on the ATR indicator, right? I'm going to show you how you can use it in a couple of different ways, right? There's a traditional way of using it. There's way some people even use it to generate trading signals, which I am not a big fan of, right? The ATR indicator should not be, in my personal opinion, used to generate trading signals. There are people who apply some sort of moving average to it and use it as a signal line to generate signals. But if you think about it, if later I'll break down the concept of an ATR indicator, right, in super simple terms for you guys to understand, and then you will understand why it does not make sense to use the ATR indicator for trading signals, right? But yeah, thank you, Nal, right? Hey, Abdi Rahman, nice to see you tune in, right? Is anyone here with us for the first time? Right? Is anyone here with us for the first time? Right. Hey Simon, nice to see you tune in. Right. Yeah, is anyone here with us for the first time? Right. I just like to see if there's anyone new here so I can direct you guys to the correct places. Hey James, nice to see you here. Welcome to the show. Welcome to the IC Markets webinar series. Right. We do it every Tuesday and every Wednesday. Right. The English webinars. I think there might be some additional English webinars coming on. Right. But it is slightly later. I think it's about 9 hours from now, or a little bit less than 9 hours from now, right? So that is more for the people maybe towards the end of the Europe session, a little bit in the US session. Not conducted by me, but I think it's another very reputable company, Trade with Precision or something, right? So go check them out. Now, hey Moses, nice to see you here. First time back again, welcome back. Martin, nice to see you. Hamid, nice to see you too, man. Jaswinda's here for first time, welcome, welcome, right? Fatherhood is going fine, man. Fatherhood is going fine, right? I think you can see my eye bags growing over the weeks, right? Parky. Oh yeah, I saw you. I saw you in the VIP room, Parky. I think I've approved your account already, right? So welcome. Yeah, Kes was running the show last week while I was on. I was taking a break because I just got a kid, right? So now we're back full in action. Okay. Without further ado, let's begin today's session. All right, guys. So as usual, our disclaimer. Remember that everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. Please do your own little due diligence before you guys trade, right? So you know the drill, right? Trading CFDs is slightly dangerous. It's very dangerous. So exercise proper risk management. And that's why we're here educating you, on how to take on the markets confidently and properly. All right. Yeah, it's nice to chat. The VIP room is growing, the community is growing, which is great, right? I want you all to continue to support each other, right? Sharing trading ideas with each other. Now that I'm back, I'll be taking a much closer look. We have a couple of new people also joining, right? And of course, testimonials privately being sent to me that people have started performing a lot better, trading a lot more profitably, right? I'll share some of them over time, all right? And all right, let's I see some questions coming in, right? Oh, Steffi, my baby is a 2 weeks old, right? Congratulations on your 3 months old baby, right? Uh, um, Eric, I'll send it to you in a bit, all right? Yeah, the first month is super hard. The first week is hard. The first day was crazy. I think they almost forgot to give my wife epidural, right, during the pregnancy, and she was freaking out, man. Right, so it was almost too late by the time they wanted to give her epidural, but thankfully they managed to like give her epidural, right, just in time, right. It gets easier after 18 years. Thanks a lot for the words of encouragement, Maps. Right. Now let's begin today's session. So we're gonna touch on a couple of stuff, right? And I don't want to one thing I'm very wary about doing is that I don't want to jump too much into the boring stuff. Okay. Oops. Where did that thing go? Where's my pen? All right, my pen is over here. Yeah, we're gonna jump really quickly into what is the ATR indicator. I don't want to jump into the stuff that you can find on Baby Pips, the stuff that you can find on Forex Factory, the very simple stuff, right? I want to show you what is the ATR indicator, and I want to share with you what is it useful for, and very importantly, then we can touch a little bit more on how to implement it in your trading, right? Depending on your trading strategy, how you can implement it in trading, and maybe you have a little bit of time, we can craft a trading strategy with it, not out of it, but with it, because it's very useful to complement your trading strategy. Oh, Bradley, yeah, they don't come with an owner's manual, man. Right, just the closest thing that comes to owner's the manual is like YouTube videos, right? It's just how to burp a baby, how to feed a baby, how often should I feed my baby? Should my baby be pooping 8 times a day? Right? Oh man, you should see if you can see my recent search history, you'll be like, wow, this guy is having a tough time, man. Right? Just like, oh man, all the crazy stuff, right? Hey Syed, good morning to you in London, right? Yeah, don't waste your time with that, Fabio. Yeah, but all right. Now, so for those of you guys who are here for the first time, just would like to introduce myself one more time, right? Thank you, Syed, and nice to see you tuning in again from KL again. Azam, one day you'll be tuning in from Singapore now that the borders are open again, right? Now, guys, a little bit about me, right? So my name is Desmond Leong. I run the award-winning research firm, Everest Fortune Group, also the Forex Army, finalist for 2019, 2020, 2021 for best FX research, and we have our best equity research too. So we really know our stuff when it comes to equity research. Okay, we usually work with the major institutions out there, the major banks, brokers, and hedge funds, to forecast where the markets are heading. But with a special partnership with IC Markets, where we are bringing you guys the good stuff, the juicy stuff, the stuff that will take your trading to the next level, right? And of course, we built a bunch of really good indicators, you can get over at the Forex Army if you want to, right? Nothing much on my Instagram account. You have follow me there, Comfy Desmond. And of course, for a range of indicators and tools, you can head over to the Forex Army for it, right? So, of course, the drill is that every Tuesday we are going to do an educational session. We've been doing it since the beginning of the since towards the end of 2020, I think, right? So yeah, it's been going on for about 1.5 years already. Every single week without fail, we'll be jumping on a webinar together, learning. Tuesdays are for learning, Wednesdays are for practicing, right? So same time, same place tomorrow, right? In our YouTube live event, you can join us for our live market analysis, right? It'll be a pretty fun time, right? Looking at the markets in real time together, making some real calls, right? And we have this is very important to practice, right? And that's where you can get it in the VIP room, which I'll be sharing with you guys later, right? And of course, we have testimonials pouring in of people taking their trading from unprofitable to profitable, 40 to 60% hit rate, 60 to 80% hit rate. Some of you guys even had an 85% hit rate for the past 1 month, right? Very, very good, very encouraging, right? There is a proper way to learn trading, right? You don't need to spend 30 years learning it the wrong way. You just need to spend 30 days learning it the right way. Okay, if anything, I want to share that as a word of encouragement to you guys, right? That it's a dangerous thing about in trading. In trading, you can learn the wrong stuff as easily as you can learn the right stuff. It's not like when in the world of academia, when you're sometimes you're studying for a course, you're studying for an exam. Most of the time they're like, all right, you study this and you will pass, right? And when we adopt that kind of mindset and it comes to trading, that is the danger, because a lot of people think that in the world of trading, you just need to study, right? The more you read, the more you study, the more profitable you're going to be, the more you can pass the exam, the real test of trading. But that is far from the truth, right? Because in the world of trading, you can learn the right stuff and you can learn the wrong stuff, right? You can learn the stuff, that's the scary thing, right? If you combine the wrong things together, right? I'm not sure if you ever did a jigsaw puzzle before, right? But you can actually piece together the wrong pieces. They feel like they are the correct pieces, they fit somehow, somehow you put them together, force them in a little bit, it looks like they fit, but they don't help you achieve your final outcome of, creating that picture, being a profitable trader. So that's the dangerous thing with trading. Some people get overconfident when they combine a stochastic, they combine RSI, they combine MACD, right? And they feel like, oh, right, all showing me overbought, oversold signals, right? I'm going to use this to create my own trading strategy, right? They're just using the same thing multiplied because they're all oscillators, right? They're all telling you the same thing, just that maybe in 3 different languages, and it gives you a false sense of confidence, right? So in this, if there's one bit of advice I want to share with you guys, is that you need to focus on learning the right stuff, right? At IC Markets, we're dedicated to bringing that to you, right? Reading the good stuff, stuff that you don't find at Baby Pips, stuff that you don't find at Forex Factory, right? And I'll be showing you how to get a little bit of that in a bit, right? Antoine, thank you very much. Yes, I'm fine, right? My baby and mommy is okay. I'll check it out in a bit, Fabio, right? How do you perform baby wrapping using ATR, right? That's right, Helmut, right? Joanna, I'll do a webinar on leverage. Maybe I'll try to squeeze one in next month. All right. Now, guys, a few important links I need to send you guys to, right? First is YouTube IC Markets, right? This is the first link, right? Sorry. This is the first link I need to send you guys to, if you can see, right? YouTube IC Markets playlist, right? You want to go to IC Markets webinars over here. I'm going to copy this and I'm going to paste this over here. Okay, this is the first one that you want to look at. All right, and if I need to rearrange this a little bit, but yeah, can go through all 56 different webinars over here, right? Each webinar is about 1 hour, so by the end of it, trust me, you will be sick of my voice. You'll be sick of the same jokes that I keep cracking, right? But yeah, this after all these different webinars, become a better trader. Okay, some stuff is a little bit more simple, some stuff a little bit tougher, but you can start. A good place to start is all the way at the bottom, and you kind of work your way all the way to the top. All right, and then covering everything you need to know, from support resistance to price action to trend line to crafting your strategy, short term, medium term, long term, right? Everything will be covered, right? You just need to dedicate the time and effort to go through them. All right, so that's the first thing with our webinars. Second thing which I want to direct you to, right, is actually our live market analysis, right? Tune in. I'm gonna paste the link here. Yeah, tune in every Wednesday. So same time, same place tomorrow, right? I just be jumping on with a live analysis session, right? So that is where you ask us real questions. You get to see the rest of the team, and rather the rest of the webinar attendees, right? I think the most recent one was done by. Oh no, this is the upcoming one. for tomorrow. Okay, I'm going to send you guys a link here. This is upcoming one scheduled for tomorrow, same time, same place. But what usually happens is during the webinar, right, we have a whole bunch of people, chatting with each other. It's nice to see each other in the VIP room, see each other in the YouTube sessions, kind of just help each other out, right? But treat together as a team, right? That's what we're very big on here, the accountability of helping each other become better traders. Okay, all right, yeah, so tune in for this session tomorrow. Now, the last, let me stop to catch my breath a bit. Okay, now let me go to the last link which I need to send you guys to, which is missing. Okay, this is the last link that we want to send you guys to. For the VIP room, right? All you need to do is to have an IC Markets account, right? As long as you have an IC Markets account, you get access into the room. It's a great place where you can practice your trading. Okay. In the VIP room, you get to go. You need to click on this button called Request Access. Okay, and that will take you to a page where you just need to upload proof of your IC Markets account, a live account, right? And then we will give you access to it. Minimally, you need $1,000 in your account. 10,000 give you a gold tier, and 100,000 give you a platinum tier. There are over 500 of us in the room, right? You can see, go to chit chat, got a whole bunch of you guys over here talking, right? Remember, just trading can be lonely. Okay, trading can be lonely, and sometimes you just want to find people, like-minded people to trade with, nice people to trade with, right? And this is the place where you can come to, right? It's a great place, right? And yeah, do jump in here and check it out. Okay, now I'm just going to teach you guys how to do one thing, right? So for example, if you are on a, let's just say, euro dollar, one of the things that you might want to learn is that if you're wondering if this is price might bounce from this swing low support, right? That is where you can draw anything on the chart. For those of you who are here for the first time, you can type in the message, hey, you can mention me if you want. You can mention Cassandra. Hey, Cassandra, potential bounce from this swing low support. What swing low support am I referring to? I just need to highlight this text. Click on this button called Link Object to Text, and you can click on what you just drew, horizontal ray over here. So when you send the message through, you press enter. Anyone who is reading it for the first time, when they hover their mouse over it, you can see it lights up, right? A nice little bounce over here. Okay, this is the swing low support we are referring to, right? Hey, Joa, nice to see you. And yeah, Antoine, that's why we have the VIP room. A whole bunch of you guys can come together and trade together, which is really, really fun. All right. Yeah. So yeah, if you want to have a dedicated discussion, click on View Discussion, and we can talk all day about this particular swing low support. Okay. Things to take note of. All right. So yeah, it's pretty fun. You can mention different people inside who and you can use hashtags to ask them about the different channels around. So yeah, it's go check it out, guys. If you don't have an IC Markets account, just open one at the main IC Markets website, right? And you will get access. And you can come in here. As long as you're funded $1,000, you can get access there, right? We have a team of analysts in there constantly replying you guys, to help you become better traders. Okay, Kyokusima, nice to see you, and Joa, nice to see you from Portugal. All right, let's begin today's session. Okay, let's begin today's session. The first thing I'm going to touch on is what is the ATR indicator, right? I'm going to pull up my chart over here. I'm going to delete this. All right, so the ATR indicator stands for average true range. Okay, now average true range. Hey Gary, nice to see you. All right, just let me take a sip of water. Sorry. Okay, let's get into it, right? So the ATR indicator is pretty common. You guys know what average true range is, right? We see it is loaded on most MT4, MT5 indicators. You see it on TradingView, but what exactly does it mean? How can you use it in trading, right? So the ATR indicator, when you load an ATR indicator, the first thing that you notice is this thing called length. Okay, now length can be, the traditional way of using ATR indicators have a length of 14, right? Lindsay, you need to register for a completely new ID separately. For the IC you don't use the IC Markets credentials for the VIP room, right? But you just need to send a screenshot of your IC Markets. As long as you have more than $1,000 in your account, you get access into it. All right. So now the ATR indicator, right? Average true range. It's actually just let's break it down. Okay. Let's break down the words, right? Average. Okay. So we know how the calculation is done. It's average, right? True is just a fancy way. Yeah, it's a fancy word. You can actually remove the word true and it still be average range of the market, right? That is what it kind of does. It just calculates the average range. Now, what is the average, right? Traditionally, sometimes it uses 14, right? The default one is 14. Whoever said it was supposed to be 14, no one ever knows, right? But they currently use 14. Now I'm a big advocate of not just drinking the Kool-Aid, right? So I tend to adjust this value over time, right? So you don't necessarily need to use 14 all the time. But just to let you know, the average the default number is 14. Okay, how does that work? Okay, so I would then take, for example, let me just take a date range. I will count 14 bars. Okay, so for example, these 14 bars over here, okay, these 14 bars, the average true range basically takes if you have an ATR value of, you have an ATR value of 14. Okay, what it basically means is that it calculates the range, the high point, all right, no, it calculates the high and low of all the past 14 bars over here, right? And then it gives you the average on the next bar, right? This bar over here, right? It gives you the average, right? So it kind of gives the purpose of this is to let you know that, okay, in the past 14 bars, the bars barely moved up and down, in more than like 20 pips or something, right? So the average range you can expect is 20 pips. Okay, that is the Fabio is asking what's the difference between ATR and moving average. I'll show you that. I'll show you that in a bit once I explain a little bit more on ATR. Okay. Now, so just to put things into perspective, right? Let me show you what I mean. We can just go to the extreme and use an ATR of 1. Okay. Let's talk about ATR of 1. Okay, guys, are you guys able to see my webcam? Oh no. Okay. Let me just check it out. Just a pretty voice. Thank you very much. If my voice is pretty, then what is Cassandra's voice, right? Okay, what about now? Is my webcam back? Okay, all right. So I think it's for some reason I got disconnected for a bit. All right, so let's talk about the ATR of just 1. Okay, ATR of just 1. So let me have this thing called a price range over here. Okay, if follow me over here. Let's talk about this big bar over here. Okay, I'm going to take it from the low point here and go all the way to the top. Okay, you can see a value of 0.01384, right? So there's 138.4 pips. Okay, this bar, this bar, how do I highlight it? This bar over here, this bar is 138.4 pips. Okay, that means that's the distance, right? If your ATR value, if you have an ATR length of 1, it just measures the ATR of the single bar. So let me take this little line. Let me just draw it over here. Oop, over there. Okay, maybe I'm just 1 or 2 pips off, right? Maybe just tweak it down a bit, right? So this is 140. I think if you take it super accurately, it might have been 140, right? I need to zoom in here. if I capture right at the top, right, 100. Okay, let's just say rounding up to 140, right? You can round this up to 140, right? You notice it's about the same, right? If you have an ATR of 1, right, it means that the average true range is only of that one little bar. Oh yeah, magnet is cool for this thing. Maybe I should just, that's a good point. I should just use a magnet over here. Does it work? Oh, the magnet doesn't work for on the indicator window, I think. Yeah, it doesn't work in the indicator window, right? Now we know. Now we know. So yeah, so if we have an ATR value of 1, it basically just measures the entire range value of one candle. Okay? Entire range value of just one candle. So that is where, if we increase the ATR value of 2, right? So what it does is that it takes the average of the past 2 candles, this candle and this candle, right? I'm just going to remove this here. So this value, this ATR value over here, where's my little arrow? This ATR value over here, okay, is the ATR is the average of the past 2 candles, okay? Meaning it takes this candle and it takes this candle over here. It's the average of these 2 candles, the 2 previous candles, okay? So you will notice that in the event that there are small candles, like let's talk about these 2 really small candles, right? That's where I'm going to take this line. You notice that the ATR value is actually very small. But the moment, right, there's a big candle over here, you notice that the ATR value jumps. The moment there's a big candle, right, there's a big candle over here, the ATR value jumps, and there's a big value over here, right? You can see the spike of this, the ATR value really jumps, right? So that's the ATR value of 2, right? So it kind of just average it out. So the moment we change the ATR, in this case, we notice that there are quite a number of spikes, right? If you use an ATR value of 1, it's not very helpful, right? You see some crazy spikes everywhere. But when you increase the ATR value, that's where you kind of smooth it out a bit, right? Gary, I'm using TradingView more to kind of just for the charting capabilities and the indicators that they have here. It's slightly easier for me to draw out the charts and to save them into different templates over here. That's why I'm not using CTrader. Okay. Now, guys, so you notice that in this case, right, we have so many spikes up here. All the spikes are very, very, a little bit messy over here, right? Now, if we change this ATR value to the industry average of 14, you notice that it is suddenly a lot smoother. It's a lot smoother, right? You can see it doesn't like go crazy, like spikes up and down, and that's where the value of the ATR is in, right? It kind of gives you an average. So if you try to put it into super simple English terms, the ATR value, how an ATR value will work is it will tell you the past 14 bars. In the past 14 bars, this was the amount of volatility that there was. The next bar, you would expect roughly the same amount of volatility as the average of the past 14 bars. Okay, that is just basically what the ATR indicator is telling you. It's telling you the key thing that it measures is volatility. It does not tell you direction. It does not tell you whether it's going bullish. It does not tell you whether it's going bearish. It just tells you the volatility of the market. Okay, that's an important thing for us to grasp, right? ATR indicator is not supposed to tell you the direction. It's just supposed to tell you that, that is what the volatility is, and you can expect the volatility to be roughly like this. It should not go too crazy. It should not go too little, right? So the ATR indicator, you can, if you put it to maybe 100, it'll become a very, very smooth line, right? Let me show you there. See, it becomes smoother and smoother and smoother, right? And if you reduce it, it becomes, oops. Right, okay, now in this 10,000 will be too small. In 14, it becomes a little bit spikier, right? 21, it becomes less spiky. 100, it becomes super smooth, right? 200, it becomes even smoother, right? But the more increases, in some sense, the less effective it technically becomes, because what is a volatility of the past 100 bar? How is it going to affect you in the next few bars? It's not going to affect you that. It's not going to be that useful. Okay, so important concept, core foundation that you need to understand about the ATR indicator. Now let's talk about how you can use the ATR indicator to trade. So the ATR indicator is very useful, in my opinion, for two things. One is usually the take profit, but more importantly, the stop loss. Okay, the ATR indicator is very useful in terms of placing your stop loss, right? And it's even more useful when you're placing your stop loss for a scalping trade. So those of you guys who know like the how to use Fibonacci confluence, right, or the concept of placing stop losses, if you're here for the first time, do check out our one of our webinars we have on placing stop losses, right? You don't just place a stop loss for the sake of placing a stop loss. How you calculate a stop loss is super duper important because it affects the risk reward of your entire trade, right? If you just randomly put a stop loss, right, like a fixed stop loss of 100 pips, it's not going to be a profitable trading strategy. You need to know exactly why you are placing a certain stop loss, right? And the ATR indicator can actually help you a lot, right, to fine tune the stop loss. Let me show you an example, okay? Let me show you an example. Okay, let's see if not the gold trade, DXY. I had a chart somewhere. I can't remember where it went to. I can't find the chart anymore. Okay, never mind. Let me try to find. Say maybe someone said pound dollar. Was it pound dollar that was having a setup? Okay, there we go. H1 chart, pound dollar, right? So this is the Nike take kind of setup that we're looking at, right? Just let me take a sip of a drink. Okay. Oh shit. Sorry, excuse me. Excuse my French. My drink just spilled. My bad. Right. Okay. So this is the Nike. Whose name is that bot? Okay. It's you gotta reveal yourself. Whose name is that bot, right? Yeah. Yeah. I'm back in the office now, right? Okay. Yeah. So this is the fib confluence. All right. Let me just calculate the fib confluence, right? I'll show you guys how we get the fib confluence. Okay, that's the 127, right? I'm guessing it's part of a bigger fib retracement level. Yep, 61. Maybe 23 from here. Okay, let's just take it as these two levels over here. I'll show you how we can actually apply the ATR indicator. Okay, we got 127. So I usually like to use 127 and 138, right? We have 138 as the stop loss placement. You notice how price tends to reverse right below 138. And in this case, we got the 61.8 retracement, right? I guess that's one of the key levels that you guys were talking about the fib confluence. If I missed any, let me know. Yeah, okay. 127 the overlap, right? So this is the pullback level, or maybe around this area over here, right? So this is the trade. If you guys got in, all right, that's good. We usually play the trade until the 23% retracement. So I usually play it until like the 23% over here. So ideally, right, the level that we're playing to is about, I won't put it over here. I won't put it over here. I'll put it slightly higher. Maybe that's the target that we're playing the reversal until. Okay, playing the reversal down to here. But all right, in terms of stop loss placement, how can you use the ATR indicator to get a better stop loss? Okay, one way, of course, assuming that you're not using the 138% Fibonacci, okay? The ATR indicator, let's just say, right, ATR indicator is 14, okay? If your entry level is over here, right, at this level, what you want to look at, right, is what the ATR was at that level. Okay, what is the ATR value? This ATR is 14, okay? The ATR is suggesting a value of 20, 20, I think it's 27, 27. Okay, so it's suggesting for you to use a stop loss of 27 pips. Okay, you can see 0025, or I mean 0027. So that is what they call the true range. You should not be expecting like prices to go beyond 27 pips in that one bar, right? So if you're scalping, right, let's just say we didn't enter that well. We entered, let's just say we entered right at the 127% over here. Okay, now I'm going to add on 27 pips from here. I'm going to click on here and I'm going to add on 27, which is about here. Okay, we need to zoom in a little bit more. Zoom in, zoom in. Now that is this, you have been very, very close, right? This 26, about 27, about here. You have been very, very close to your stop loss. Price would have just kind of hit your entry. So, we usually enter the 127, right? So price would have kind of hit the entry, right? Kind of go up to here close enough, right? And then, hopefully it's reversing down from there. But this is one example of using ATR for your stop loss. Your stop loss will kind of be at the value over here, and the value is using ATR. 27 pips is about over here. Okay. That bot, I would say maybe not too good to get in on the trade now, right? Price has moved a little bit further away, so not too good a level to get in. I mean, if it retraces back, I usually, for these kind of trades, I usually hope that they reverse, they drop right away. But if they don't drop the next few bars, I'll probably move to break even and get out of the trade, right? Because a reaction trade such as this, right, if the reaction is good, it should see it drop right away. It should not hover there for like 1 or 2 or 3 or 4 bars. So Fabio is asking, the ATR needs to be on the same time frame of my analysis, right? So ideally, yes, the ATR needs to be on the same time frame, because if you go, if you're scalping on the H1 chart, you are using the data from the H1 chart to arrive at your analysis, right? If you go and look at the H4 chart, you end up you're messing around with the time sensitivity, right? That means your trading strategy, which was based on H1, you should use ATR on the H1. The entry level that you use, that you base the time frame which you use to base your entry level on, right? You should use the ATR on the same time frame. Okay. So in this case, right, of course we won't look at the 1 day time frame, because all of this would be happen in a single day. We probably can't look at this from the H4 time frame, because it's a little bit too it's not much of a scalping setup. It's a little bit too the price movement look at is a little bit too granular. We actually need to go down to the 1 hour time frame for this particular analysis to make sense. We can't even go down to the 50-minute chart, because a 50-minute chart is a little bit too messy, as you can see over here, right? So if you're doing the analysis on the H1 chart and you're basing your analysis on the H1 chart, then use the ATR use the ATR on the H1 chart for your stop loss placement. Okay. So usually people like to take this thing called ATR multiplier, meaning that you don't take 1 times ATR, right? Because that means the price might still fluctuate within 100% of the ATR, right? Because that, after all, is the average range. You want to give yourself a buffer. Instead of using something like 1 times ATR, right? What you want to do is to take something like 1.2 times ATR. So instead of using the value of 27 pips over here, I'll take 27 times 1.2, right, which is about 32 or 33, right? So instead of using a stop loss of 27, I would use a stop loss that goes all the way up to 33 pips. 33. This is like using 1.2 times ATR. That gives us a little bit more breathing space, because what it actually tells you is that for the past 14 bars, the average that the price tends to fluctuate is going to be around 27 pips, right? So price might actually, if you put your stop loss at the 27 pip mark, it just might as well just fluctuate to that level, right? However, if you use 1.2 times ATR, that means you're giving yourself that little buffer beyond the past 14 bars average to put your stop loss. Okay, so it gives you just a little bit more breathing space. Okay, so it's very this kind of trading approach is particularly useful when you're scalping, right? As you can see over here, it's particularly useful to give yourself the breathing space, right, when you're scalping. Now, another thing that you want to do, oh sorry, another thing which you can consider, right? If you're on a lot of us use trading view, another thing which you can consider for stop loss placement is you actually search for this thing called ATR channel, right? And the ATR channel, as you can see over here, ATR channel, you can add in the multiplier, right? So usually high, no, sorry, it's the open. You usually want to use the open as the because at the open is where you kind of know where is the what's the word for it, using okay, just in this example, just use open, because open is where the price opens right there and then, right? If you enter a trade there and then you have no other external kind of information, you kind of use it as the entry, right? So use open, right? And you can add a multiplier of 1.2, 8 ATR 14, right? And then you can see I think I need to change this to a different color, right? Maybe I change this to the upper band. I'm going to change it to purple and make it super thick, maybe this thick, right? So you can see over here, right? If you use the ATR channel, it kind of gives you this little channel for you to put your stop losses, right? I mean, if price goes too crazy, you know, you might just get stopped out. But most of the time, right, you notice that it kind of keeps, you know, it protects you from being whipped out. Let me see if I can just erase everything. Okay, let's see over here. You notice most of the time, right? Most of the time, price kind of just stays within there. Sometimes it stops you out, you know, but most of the time it kind of reverses right below. You know, it keeps within the range quite well. Only in times where the bar goes crazy, right, then you get stopped out. Even in spikes like this, you can see that the ATR, you know, having ATR 1.2, it can kind of keep you relatively safe. It's not a 100% fail safe approach, right? I think Bollinger Band uses a different calculation, but ATR indicator in this sense, right? What it does is that it gives you that little bit of it's a very realistic way to let you know, okay, I'm going into this particular trade. What's the worst that can happen, right? If price really from the open, it just goes purely against my direction, right? It goes purely against me. How bad, you know, where can it possibly go to, right? Of course, in this case, you know, the ATR, you know, it assuming when price opens, it just goes 100% in your direction, right? But the truth is that it might go up, it might go down a bit, it might go up a bit. So you usually tend to be pretty safe, as you can see from the calculations over here, right? Bob is asking me to yeah, Jasper, if you've never seen this indicator before, it's called ATR channel, right? You can actually search indicator, right? It's not very common, but you can check it out. It's called ATR channel. I think the one is a, yeah, it is this one by Gareth Yo, right? It's this one by Gareth Yo that you can check out, right? And that's where you can edit it a little bit just to give yourself a rough gauge on the channel. Okay, right? So yeah, these are less popular indicators, less mainstream indicators, because a lot of people are just looking at the wrong indicators. But this indicator gives you a good gauge on where you can place your stop loss when you get into a trade, especially if you cannot find a stop loss, right? Because of, you know, there are no other good levels in between, right? This is a great way to actually give yourself an easy stop loss, or maybe just fine tune your stop loss just that little bit. Okay, so we got requests to compare ATR indicator and the ATR indicator and the Bollinger Band, right? So let's compare that, right? So let's just compare the ATR indicator and the Bollinger Band. Okay, so this is the ATR indicator. Now I'm going to throw on the Bollinger Band. Very different, as you can tell, right? So you can see the Bollinger Band tends to, well, it's not as good in terms of stop loss placement. Bollinger Band is more used to tell you where price might reverse from. You notice that it gives you pretty different readings, right? You think about it, look at all this reading over here, right? All these readings is all pretty far away, right? The ATR channel, you know, would kind of keep it a lot closer, right? While the Bollinger Band kind of expands when there's big volatility, right? RJ is asking about the Donchian channel, right? So let's show on then the Donchian channel, right? I think Kes might have covered it previously, right? I'm going to hide the Bollinger Band, right? Erase my drawings, right? And you can see, yeah, the Donchian channel is like here, right? Notice it's also pretty far away from the readings of the ATR channel. So ATR channel, why I'm saying that, is used particularly good for scalping, right? Or when you're just getting in the trade where you want to give risk the minimum amount that you want to risk, right? The ATR is a good gauge, right? And you can fine tune it a little bit more, right? Yeah, you can fine tune it a little bit more by playing around the period. But as you can see, right, Donchian channel and Bollinger Bands, right? Okay, in this case it's 20. Even if you change it to 14, right, you notice that it's still pretty far away from the reading of the ATR channel, right? It's just because they're using a standard deviation calculation, which is different from the average true range, which is just really finding the average of the past X number of bars, in this case 14 bars, right? If support resistance levels from ATR stop loss, which one should be used? My preference is always use the support and resistance levels first. Then you fine tune it a little bit with ATR, right? Yes, I have launched the application, right? I think it might be ready today, right? If it's ready, I'll launch it. I'll announce it in the VIP room, right? The Android application for us to use. All right. But yeah, this is how it kind of differs from the Donchian channel, how it differs from the Bollinger Band, right? It's a pretty good indicator that you can use, right? And my personal approach when it comes to trading is that, especially when you use it for scalping, in these kind of scenarios, right? Like for example, you're just trying to take a trade. If we realistically talk about this trade, 127138, right? I would then use the ATR channel. Oh man, it's quite hard to see. But for the entry, this would ideally then be the stop loss. It gives you a good gauge on how far price might go, right? If you want, if loading the ATR channel on your chart is a little bit too messy, what you can do is just to load the ATR indicator, ATR, average true range indicator, right? Some people are asking, is it just always better use 14, or is it better to use a smaller number? The risk of a smaller number is when it gets a little bit too wide. So if you use a small number like 3, right, our ATR will be pretty high over here. Our ATR will be 43 pips, and a 43 pip stop loss would be all the way up to here. It might be a little bit too far away. Okay, so usually it's better to kind of give yourself that little bit of breathing space. 14 is a good amount to play with, right? There's no hard and fast rule over here, right? But it's a good way to fine tune your entry just a little bit more. Does the Chandelier stop work in a similar way to ATR? So Parky is asking if the Chandelier stop works in the same way as ATR. Yes, in fact, the Chandelier stop, which I have over here, works almost in the uses the ATR. So you notice when the Chandelier stop, which you use, which I'm a big fan of, is that it allows you to input the ATR period, right? It then allows you to input the ATR multiplier. But the problem with this particular Chandelier stop is that my ATR multiplier, I ideally want to use something like 1, or 1.2 or 1.5, right? It only allows me to use 1 and 2, right? But let me see if I can find another Chandelier stop. Chandelier stop. What my Chandelier stop, I'm not sure. ATR multiplier 1.5. No, this one doesn't allow me to use decimal places too, right? Nope, doesn't. Okay, so yeah, that's the problem with some of the Chandelier stops. They don't allow you to use a decimal value of like 1.2 or something, right? But yeah, Chandelier stop functions very similarly to an ATR stop, right? In fact, the Chandelier stop is based off ATR. That's why you notice that they are pretty similar, right? When do you use a lower/higher value of the average? Bob, it's hard to say. It's hard to say, but usually, right, the ATR indicator, a good gauge is just use 14. It's a safe enough number for us to use for starters, right? But remember, it's used mainly as a gauge on how far price might go in the next few bars. If you really want to think about it, right, depending on how many bars you expect your trade to be, right? If you estimate that most of your trades tend to last about 5 bars, right? Then you kind of want to know what's the average of the past 5 bars, right? So you can actually tweak this. If your scalping setups tend to be, if your scalping setups tends to be about 5 bars long, then you want to know what's the risk exposure you might get based on the past 5 bars. Okay, right? So it's used more as a gauge on where to place your stop loss and take profit distance. Maybe yeah, you can change it. I think you can edit the script there directly. Yeah, I hope that answered your answer, Parky. Yes, the Chandelier stop works very similar because it to the ATR, because it is actually based off the ATR indicator, right? Yeah, I hope you found this session useful in terms of especially placing your stop loss right when right when you enter the trade, right? So for example, when in this example, right, the moment you enter, if you were to enter a trade over here at 127, right, and let's face it, right, you will have entered the trade on this bar over here, right, and your ATR at that point of time would be, let's just say we have it at 14, right? At that point in time, your where's my multiplier? Oh, I can't multiply it here. Okay, at that point of time, your ATR value was at about here, 25 pips, right? You multiply by 1.2, right? And then you use that value, right? I'm just going to show you how it looks like here. You use that 25 pips to give yourself the breathing space. 25 times 1.2 is about 32 pips to give yourself the breathing space for this particular trade. Yeah, that's right, Tuan. You know, you don't just use a fixed stop loss of 20 and 30 pips. You use it as a gauge to know roughly how much breathing space the market can afford you. Right, would it be better using support and resistance or pivot points? Gary is asking, is it better to use support and resistance or pivot points for your stop loss? Yes, the first and foremost, the important thing is that if you cannot find a key, for example, in this setup over here, right? Assuming we don't have the 138% Fibonacci level. Okay, you found a Fibonacci confluence area at the 127. You look over here, the next big resistance, right? If you notice that the next big resistance is over here. Next big resistance is over here, but we only want to play our take profit to here. And our entry is over here. And our entry is over here, right? We can't possibly have this big a stop loss, right? So big a stop loss and so small a take profit, right? Because our next big resistance is over here, right? Oops. Even if you use a Fibonacci retracement from the top all the way down to here, and we use it at all fibs, right? The 78.6% retracement might even be over here, which is still, you put it slightly further away, it is still very big compared to the take profit. So in the absence of any key like Fibonacci level, there's no other key resistance or support level for you to fine tune your trading, fine tune your stop loss placement. You can use the ATR indicator as a good gauge that, okay, you know, like what I always say, you know, you can't look at how big the spikes are in the previous few bars, and then you kind of use eyeball it and put your stop loss maybe slightly beyond that spike. That is actually a version of the ATR. You know, you're just looking at the average true range of a spike, right? And then you're just trying to roughly gauge it, right? But if you use this method, right, you actually have an indicator that tells you the exact value of roughly what is the ATR amount, you know, what is the average amount that you should be expecting for price to fluctuate within. Okay, I'm glad it makes sense as usual, right? And yes, you can use it for indices too, Steffi. All right. But yeah, today's session is a lot more on fine-tuning a stop loss placement. I hope, you know, if you please go and try to use it, especially if you cannot find any other levels for your stop loss. You really want to fine-tune it. You want to tighten your stop loss. Yeah, this form of ATR in using this way of using the ATR indicator, you notice there's no reference to Fibonacci, there's no reference to support resistance, no reference to pivot points, right? It's just using the range where and hoping or expecting that price would not go beyond that range when you get into the trade. Okay, so that is a different way of trading, right? And it's just another way that you can add the arsenal of tools to use the tighter your stop loss, the better your profit ratio. I mean, a profit factor of your trade can be. Okay. Can I use it for continuation trade? More for stop loss placement. You can use the ATR indicator, for that too. Okay. But all right, guys, thank you so much for tuning in. Right, if you don't have it, if you haven't, right, please tune in for tomorrow's live market analysis sessions on YouTube Live. Pretty fun session together. Be jumping in, looking at the markets together. Right. I hope you found today's session is really a deep dive into ATR indicator, understanding how it's calculated, why it's calculated the way it is, how you can use it in trading, and not just throw it there and not understand how it works. Right. It really gives you today's sessions really give you an in-depth understanding of ATR. Right. Thank you, Kanemba. Right. Thank you, Jasper. Right. Thank you, Desiree. Right. Yeah, go test it out, Bob. Right. Thank you, Mark. Thank you, Ajay. Right. Donovan, Fabio. Nice to see you guys back. Right. Be a fun session. Yes, I'll see you again tomorrow, Donald. Right. Thank you, Tuan. Right. I'll catch you guys again tomorrow. Thank you, Azam. Right. It's been a fun time. Right. Best of luck with the baby from Gary. Thank you very much. I'll do my best. Right. And otherwise, I'll catch you guys in tomorrow's session. Tune in. Otherwise, in between, you can find us on the VIP room. Right. As long as you have an IC Markets account, right, you get access to the place. All right. That's it for me, guys. Helmut, what was your question? I might have missed out your question, Helmut. I'm trying to scroll back. Is the following good? ATR 14 ATR should be used for 1 million less than 50% of ATR ATR is greatly reduced. Scalping risk to be reduced. The scalping to be used for 1 minute scalping. ATR 3 is less than 50% ATR volatility. It's greatly reduced. Scalping risk to be reduced, or scalping to be stopped. Helmut, let's continue that conversation in the VIP room. Helmut was asking something about combining multiple ATR values 14 and 3 to determine the how good a potential scalping setup might be. It's a little bit confusing. I need to test this out a bit. If it makes sense, yeah, then we can continue. Then I can start. I can answer you properly on it. All right. Okay. Right. No eye bags yet. I actually for the first time put this little thing under my eye. Right, those Korean skincare stuff, so I don't have eye bag. Right, I'll catch you guys again tomorrow. Right, take care, stay safe, trade safe, and peace out, guys. See you tomorrow. Thank you. Thank you very much, Joa. Adios, guys. Adios. Yes, Pierre. 1.2 multiplier. Okay. Take care. Stay safe. Catch you guys in the VIP room. Bye bye.